Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Great to have your company. Let's have a look at what the local market is doing as we head into the close. And there's a bit of a wobble around midday or so, but it does look like we are actually going to push higher into the close, a third of 1% higher on the CBO 200, the ASX 200 up by about 0.2% to 8,610 points. A lot of momentum actually coming through from the resources sector today. That is thanks to high copper prices, and that's offsetting some weakness in the interest rate sensitive sectors. The bond market pretty much pricing out any chance of an RBA rate cut this cycle. In fact, it looks like it's going to be more about rate hikes now if you take into account our spending patterns. Let's get to the themes of the day then, and it certainly is about hot copper. We had copper on the LME hit a record high overnight, but it's hit another record on the Shanghai contract as well today. So lots of momentum coming through from that metal, and of course pushing a lot of our copper stocks higher, and also BHP lifting the overall market. Now, I mentioned the spending, so we are still spending. In fact, Australian households went on a bit of a bender in the most spending in almost 2 years in October. So that is just showing still a lot of economic froth and really signalling that the next move in interest rates could be up rather than down. The strong spending data also boding well for fourth quarter GDP. It seems that we were lured by year-end sales events and just a lot of discretionary spending out there, and swaps now pricing in about a 50% risk of a hike in May next year. That all leads, of course, to rate uncertainty, and of course, as we look ahead to the likelihood of a cut from the Fed in December, certainly going to be on hold here, and more likely that hikes are coming in 2026 than any further cuts. Let's have a look at some of the sectors now, kicking it off with those copper players as we saw records being reached in the copper contracts. Capstone there had a great session, up by 8%, and in fact, the top performer on the ASX 200. Elsewhere though, we saw consumer discretionary stocks, of course, in focus after we had that retail spending data, which showed that the household spending indicator jumped 1.3%, $78.4 billion spent on spending. You can see there the REITs though, under a bit of pressure as we continue to monitor what is likely with regards to interest rate momentum. Bendigo Bank, meanwhile, to buy RACQ Bank's book of $2.7 billion in loans and $2.5 billion in deposits, shares just marginally higher. Pro Medicus there dipped on a data breach. BetMakers, though, had a good session, up on an agreement to launch Crown Bet. Cash Converters are pretty flat there on the close, 31 cents. It did acquire 29 franchisee stores for $37 million. And Step One down by 37%, plunging as guidance was pulled on its sales slump. Let's get to our guest, Mathan Somasundaram from Deep Data Analytics, joining us. And Mathan, all about copper today.
Yeah, it's been a bit of a market darling for a while, and every time investors are trying to find where to jump in, and I mean gold has been and silver has been a big play. And now gold, copper is following that trend. It's trading at near all-time highs. So I'm not surprised that the market keeps jumping on it. The question is going to be how does the global growth look? In that outlook, how does copper perform? So that's the big question.
And what's the answer?
I seem to struggle with the concept of where we are, because if copper is trading where it is, why isn't oil doing so well? Energy is underperforming. That tells me the economy is weak. And so if the economy is weak, generally that means there's not enough construction play that's going through. So in that scenario, I don't see how copper is going to hold up. So it's done well, and there is obviously some supply side issues that are playing into it. But in a medium to long term, I think we got to see some change in the cycle. Either we need to see stimulus, which supports recovery and growth, or I suspect copper is going to have a bit of a pullback.
Well, it doesn't look like the stimulus is going to come. We keep spending too much. What did you read into the household spending data?
Yeah, I think the problem here is that's the thing. Every time we try and control it, the narrative that comes out is, oh, you should spend more because there's going to be rate cuts coming. There's going to be this coming, that coming. There's going to be stimulus from China coming. So at the end of the day, inflation is real. I mean, anyone who goes to the shops or the supermarket knows that they're paying a lot more for what they used to get. So in that scenario, you turn around and say, well, everyone's just running up debt, and going into Christmas, inherently, we all spend more than what we should. So I can't imagine things are going to slow down. And, RBA is already under pressure with rising inflation and relatively strong job market. So I think the rate cuts are pushed out into the long term. And the reality is the interbank rates are actually showing that there's a potential rate hike in the next 6 months. Now, nobody wants to talk about that. And, that's probably the last thing the RBA will think about. But the reality is that just means that the rate cuts are off the table for the medium to short term. So in that context, I think it's going to get tougher. And we're not helping the situation because all their spending data, as you said, is very strong. And the employment data, historically based, it's actually quite strong. So there's no real catalyst for the RBA to cut rates.
What do you think we're going to then hear from Michelle Bullock next week at the meeting? Because it really does seem like there's not going to be any even discussion of a cut at all, really.
Yeah, I don't think that's in the cards anytime in the near future. The interesting part everyone's going to be waiting is what do they guide to? And the data suggests that they should be starting to talk about hiking, not because they want to hike, but they need to slow down the spending. So they need to talk. I mean, I don't think it helps when everyone's talking about, I'll give you a 5% deposit to buy a house, I'll give you this, or potentially you'll get more rate cuts. That just gets people to spend more money, which kind of makes it harder for them. So I think they really have to start talking about, look, stop spending or we'll have to hike. And that's what they have to come out with. I mean, at the end of the day, that's what they need. So they need to talk it up. If they don't, they're going to get caught out and people are going to keep spending because they think they're going to get the rate cut, and that won't come.
All right, what other sectors are you looking at away from what we've touched on with copper and retail?
Look, I think the inflation thematic is playing out around the world. We are seeing inflation picking up. And we've now seen, our thematic is, all the inflation-linked sectors should be doing better. And that means things like energy, things like food should be doing better. And in the last couple of weeks, we've seen substantial flooding in most Asian countries. And they're all food balls. So food prices are potentially going to go up. I think that risk is really high, especially on a global basis. We've seen Indonesia, Thailand, Sri Lanka, substantial flooding and massive loss of life. And that means food production is going to be down. That risk is going to be there. And that will also play into the mining side of things. If we get erratic weather, then supply side shocks are not going to be a surprise. So I would suspect that we're going to see food inflation. We're already seeing gas prices in the US picking up, and LNG prices are going up with it. Now, what's happening with Russia is interesting. Now, if there is a pushback from Europe buying in from Russia, well, then they have to buy in the open market, which means gas prices are going to go even higher. So the supply side shocks in the inflation-linked sectors like energy and food, I think that still plays out. We remain very positive in that thematic. History tells you when inflation picks up, eventually energy and food join the party. And so far the market's not paying for it. That's where the upside is.
A little bit to talk about defence as well. I mean, Drone Shield was one that has been in the news for maybe not so good reasons of late. But today I noted it was up 5%, and AussieX saying it was actually the most traded stock on the ASX across October. What are you thinking in some of these defence players?
Yeah, it's a tricky one. We've been in it for a long time. We've started to get out of it. Our best play was Codan. Went from $4 to 36, I think, at the peak. Yes, it's a really good business. I think we played the few other defense stocks, and everyone's jumped into the defensive ETFs as well. So they've all done really well. Now the question being is, you have to remember if the defense stocks continue to perform for a long period of time, that's not a good thing for the whole economy, because that means we're all going into more and more war. So the best thing about these things is they're a trade. You go in when everyone thinks the budgets are going to be more defense oriented, they're going to spend more money on defense, there's going to be more contracts, and these stocks have a huge run. And when these stocks have huge runs, you have to remember they have to win massive contracts to make those things worthwhile. You can't win small store, $10 million, $15 million contracts for revenue when you're worth $3-4 billion. So the reality is, as the share prices run up, multiples expand, the expectations get higher and higher. So we're not chasing any defense stocks at the moment. I think that cycle is mostly over for now, unless we see some dramatic increase in the defense spending, which I can't see anybody doing because everyone's got too much debt. So at this point, it's more or less the best hope is if the Americans pull back on their spending into Ukraine, in supporting Ukraine war, then the chances are the Europeans will take that spot. So there is a certain play in which part of the spending that plays, and if Europeans are going to fund it, then they're probably likely to target more European defense stocks. So there's been a lot of money that's moved into the European defense stocks, and they've had a good run as well. So there's a lot of expectations in that sector. So if you're looking at fresh money, I wouldn't say you're trying to pick the bottom here. And when they're coming off, don't try and pick the turn of what these things ran up to, because the first run is as good as you get because there's a lot of blue sky. The next time, there's going to be a lot more reality check to it. So I'm not a person who's trying to pick the second run on a defense sector that's had a huge run in the last couple of years.
All right, Mathan, really appreciate your time as always. Mathan Somasundaram from Deep Data Analytics. It was a US special on the call today. The stock of the day was Salesforce. Nadine spoke to the Marks, Mark Morland from Value 3 and Mark Gardner from MPC Markets.
You're going to need to really come up with a compelling product that they can monetize going forward to make this an interesting investment. And I actually think there's a real risk for a lot of these SaaS companies, particularly this kind of company, to be disintermediated by new AI approaches. And the new AI approaches are where you could build a platform, for instance. The tools are so good now, you could actually cherry pick how you build your CRM and it would build it for you on the spot. And then the cost of doing that will be peanuts compared to what these guys charge. I think it is a really big risk. So even if they do a successful job of harnessing agents and build a business, and they might, I think that's just too big a risk for me.
I don't see those risks because Microsoft and the likes have shown track records in the past. I mean, the reason Canva exists, the reason a bunch of software exists is because, Microsoft Office came out in the 90s. There's not too many, massively innovative products that have led the market since then.
All right, let's have a look at the leaders and laggards on an up day for the market. And of course, we talked about all the momentum coming through in those copper players. Worth noting, BHP at its highest level since October 2024, and Rio Tinto has reached a record high. It's already up about 20% this year, all thanks to that momentum that we saw in copper today, helping it get to a record. Let's have a look at the laggards though. And some lithium players under pressure there, including Liontown down by about 6%, PLS also off by about 4.5%, and Aluka down by about 4%. In the small end of town, these stocks on your screen had a great session, including Cettire, as we continue to talk about spending too much money. It was up 16.5%. To the downside though, Bougainville Copper making a liar out of me with all the upside in copper players, and Alterity Therapies down by about 10%. Tonight we get the US Challenger job cuts for November, around 100,000 redundancies expected. Also the weekly unemployment claims and some earnings including HP, Kroger, Dollar General and DocuSign. Tomorrow is Friday, yay! We've got Japan lending indicators, household spending data and a couple of AGMs including Premier Investments and Arafura Rare Earths. Let's have a final check on the local market. It is up by 1/3% there on the close, and having a look at where the ASX 200 has finished, also 1/3% higher, 23 points, 8,618. virtually unchanged over the last 5 days, though, when you look at the ASX 200. The VIX index, AVIX, down 3.5%. That does it for this edition of the COB. We'll be back from 9:45 a.m. Eastern tomorrow. We'll see you then.